Okay, we're ready. Okay, ready to go. All set, Mayor. We're ready to go.
Thank you, Sherry. Good afternoon, everyone. And as always, thank you everyone for making time and for lending your energy and your wisdom to this work. We really appreciate it. I'm also very happy that the governor extended the Open Meetings Act so that we can meet virtually. It certainly makes it a lot easier for us to get together. So nice to see you all here on the screen. So it is 12:06 and we'll call the meeting to order. We'll start with a roll call attendance vote, please.
Chairman Lawson,
Present.
Vice Chairman Lombardi,
Present.
Chairman Ryan,
Present.
Syria,
Present.
Costello,
Present.
Hirsch,
Present.
Winkleman,
Present.
F7 present. We have a quorum.
All right, let's jump in. So Happy New Year to everyone as well. This is our first meeting of the new year. So hope everybody's doing well and staying safe and healthy. So let's just jump in. We have a pretty straightforward agenda today. We'll start off with the investment performance analysis and I'll hand it over to Eric and his team.
Thank you, Mayor. Hello, everyone. Happy New Year to you as well. If you open your package, and as we traditionally do, go to page 1 of your book in tab 1. We'll go over the current estimated investment position and performance through January 21st, last Friday. And as you all probably know, markets have been extremely volatile lately. We talked about this in the last few meetings, to expect this. And the lion's share of the volatility and the sell-off in equity markets, really in bond markets as well, has been driven by Fed policy. A hawkish shift in Fed policy is the main reason. There are other things going on too. What's going on with Russia and Ukraine is affecting the energy markets a little bit, and of course the Omicron wave has been quite strong, especially here in the Northeast in the last couple of months. Negatively affected December to a degree, but is very negatively affecting economic activity in January, where we are currently. But markets are looking past that. They really are. They're pricing through the Omicron wave, and it looks like it's peaked in many of the bigger cities, etc. And they're acting as if in a month or two things will be noticeably better there with respect to economic activity. Really, it's been Fed policy. Maybe some of you are following this. Yesterday, for example, Federal Reserve had the results of its meeting, and there has been a hawkish shift, and has signaled that they will be raising interest rates probably starting in March. They will certainly be done with their asset accumulation, their quantitative easing. They will no longer be buying any. They will be done by March. And in fact, they'll probably later in the year sometime, maybe in the summer, start to allow the balance sheet to shrink. So allow some of those purchases of treasuries and mortgage-backed securities to roll off. So between telegraphing that rates are going to go up because the emergency is ending, and that the balance sheet will no longer grow and in fact potentially start to shrink soon, that is a tightening of monetary policy. Rates have gone up a lot. I'm sure many of you watched this, but the 10-year is up into the 180s right now. The 2-year yield, which is very sensitive to Fed policy, is now well over 1%, been bouncing between sort of 1.1 and 1.2 very recently, was up a big yesterday, and that's affecting markets. New discount rate, higher discount rate tends to lower the prices of stocks. As rates go up, of course, that lowers the prices of bonds as well. So if you look down through the numbers for the month to date, you can see something that's quite interesting, and that is the big differential in return between value and growth. You can see that large cap value is down 2+ % year to date. Large growth is down over 12. You can see in mid cap value down 2% or so, depending, or 4 if you look at the index fund. And small cap value down 4 to 5, depending on whether you look at our active manager or our index fund. But small growth and mid growth down over 15, pushing 16%. So as interest rates are going up, the discount rate that the cash flows that stocks or bonds, but in this case stocks represent, is going up. And because growth stocks are longer in duration, they tend to show a higher sensitivity to increases in rates. That's another way of saying they go down more when rates go up. When rates go up and other things the same, they tend to go up more when rates go down. So you can see that. Internationally, the effect has not been as severe. In fact, as you can see with Brandis, our international manager, actually up 4.4% year to date. So value, and they're our deep value manager, value has very much outperformed in this environment. And to the extent that it continues, you'll probably see that continue. There's no guarantees, but you'll probably see that continue. As you move to our fixed income, you can see whether it's Loomis or our Treasury ETF, those are both down, 1.1% year to date or 1.3% for Treasuries. A little less so on the international bonds. The dollar had stopped strengthening. It's strengthening a little bit now. There's some impacts that can have. You can see our total fixed income is down 1%. So with the S&P down 7.7% through January 21st month to date, you see the portfolio is down 4.5% month to date. So that's the value protecting you a little bit. That's your fixed income, of course, which is much less volatile, protecting you. And also the hedge funds are adding value. Quellos is actually up 1% month to date, and Renaissance down a lot less than the market, down 2.7% year to date. Now, we just got, for further context, and then take questions if you have them, we just got some economic data today. We saw that GDP was up 6.9% in the fourth quarter. This is extremely strong, historically strong numbers in the fourth quarter. And if you look at nominal GDP growth, that is add back in inflation, it was up around a 12 or 13%, maybe even a little higher annual rate. So extremely strong nominal growth for a country the size of the United States in the fourth quarter. That's going to reverse here in the first quarter because of Omicron. You may remember in the third quarter of last year, during the Delta wave, growth came in much weaker than expected. I'll say only a 2% real rate of growth in the third quarter. That was the effect of Delta. So you're going to have that effect here in the first quarter as well, whether you look at the various PMIs or some of the other data that's already come out for January. There's been quite a disruption here in January for economic activity. But that said, earnings are coming in very strong for the fourth quarter. That's one of the reasons markets were up so much last year. It looks like earnings for the S&P, when all the numbers are in, they're not quite in yet, will be up about 50% year over year. The S&P 500 will show about 50% earnings growth in 2021. And they were down in 2020, of course, so you're rebounding from 2020 because of the shock of the pandemic. But if you annualize the growth in earnings for 2020 and 21, So saying what's happened to earnings since 19, the last normal year we had, earnings are growing at about a 13% compound rate of return of growth over that 2-year period. Down in 20, up huge in 21. Annualize that out, it's about a 13% or more annualized growth rate, which is almost double the long-term average. So it gives you some context as to how strong the recovery in the economy has been, and how strong earnings have reflected that. But right now, of course, as you all know, inflation is running very high. So the Fed is reacting to that and signaling this hawkish change in policy in an attempt to control inflation. That is what is the main or the proximate cause of the sell-off you've seen recently in the volatility. And you've seen it intraday as well as, over the last couple of weeks. Just yesterday, for example, the NASDAQ was up 3% before Chairman Powell started talking and ended up being in the negative by the end of the day. So huge swings in markets very recently, and I don't think that's over yet. I do think, however, that as you can see from your portfolio, and it will be expressed in the returns that you see in the portfolio, I think earnings are going to be strong this year, again, for the entire year, well above average, and so will GDP growth. But inflation is also going to remain high for at least a while. I think it will decelerate towards the second half of the year and towards the back end of the year. But in the meantime, it's high and will remain so as especially COVID and the reopening leads to these shortages that you've all heard about: chips for automobiles, raw materials, shipping and transport has been affected. So I think we have to expect to see more of the same. But so far, portfolio holding up well in the face of that, as it is designed to do with its diversification, exposure to the various factors. Value in this case is helping, fixed income stabilizing the portfolio. But I still think by the end of the year we'll be higher and we'll have a positive year. But I think we've got some volatility to go through in the meantime. So I could take any questions on that, Mayor, if you like, before we move on.
Sure. Thank you, Eric. Any questions or comments for Eric? Okay. If there are none, I'll entertain a motion to accept Eric's investment performance analysis is just delivered. Is there a motion?
So move.
So moved by Commissioner Winkleman. Is there a second? Seconded by Commissioner Costello. Any discussion on the motion? All those in favor, please say aye.
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 Are there any opposed? Okay. The investment performance analysis is accepted. Thank you, everyone. And we'll hand it back to Eric for agenda item number 2, discussion relative to Dexter Donation Fund and other trust accounts.
Thank you, Mayor. If you, and I'm just opening it myself, if you go to your other book, I'll cover the Dexter donation material. We usually start with these trusts. We usually start with Dexter donation. So if you go to page 1 of that book, you'll see a similar story. Because the portfolio is has more equity, less fixed income, and no alternatives. Tends to have a higher beta, tends to go up more in good times when markets are going up and down more than the pension portfolio. And you can see it's down 6.3% year to date. But very similar story, of course, with growth versus value, and international, for example, versus domestic. And of course, the fixed income with rates rising. Very, very similar story. And if you were to page through, you see the numbers are all very close to each other, almost identical. The only differences would be spending, various differences in spending by trust. But I'll take questions if there are any there as well.
Any questions or comments? I have a quick question for you, Eric. I was trying to page down and couldn't find it. Comparing the results here to, I just found it. I was going to ask, what is the index that we compare this to? I found it on page 25. All right. Are there any other questions or comments for Eric? All right, if there are none, I'll entertain a motion to accept the performance analysis for Dexter Donation Trust and other accounts is just delivered. Is there a motion?
So move.
So moved by Commissioner Winkleman. Is there a second?
Second.
Second.
Seconded by Commissioner Hirsch. Any discussion on the motion? All those in favor, please say aye.
Aye.
Are there any opposed? All right, that motion is approved. Move on to matter number 3. And trying to get back to it. All right, matter number 3, related to any claims or litigation. Ken, is there anything to discuss today?
No, Mayor, nothing to report.
Okay, so I'll entertain a motion to continue matter number 3 until our next meeting. Is there a motion?
So move.
So moved. Commissioner Winkleman, you're on a roll. Is there a second?
Second.
Who seconded?
Seconded by Commissioner Hirsch. Any discussion? All those in favor, please say aye.
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 Are there any opposed?
Yeah.
Okay, that matter is continued. I'll entertain a motion to adjourn.
So move.
So moved.
Make it a foursome.
A clean sweep. And seconded by Commissioner Costello. All those in favor to adjourn, please say aye.
Aye.
Any opposed? All right, folks, we are